Hey guys, welcome to Weekly Crypto. Welcome back, guys. So today I'm going to talk about Bitcoin price. Yesterday morning I talked about how low the Bitcoin can go, and also how the supply and demand curve can predict the price of Bitcoin. Before we get into that, make sure you subscribe to my channel so you don't miss out upcoming airdrop, hard fork, and ICO. So there's an airdrop right now. It's called ContentBox. It's essentially a decentralized digital content ecosystem. So if you go to airdrop and you join the Telegram group, you get 10 points, and then also you can earn more points by inviting your friends to the group. You can get up to 20 points. It's like a random amount of points you can get. And also, they also have a competition, and the top 20 connected community members will be rewarded as well by the end of the month. And also, if the group reach about 80,000 members by June 25th, they will release additional 100,000 token, and they will distribute equally to each community member that take part in the first round of the airdrop. And how to convert your points? You can download Castbox. So Castbox you can download in the Google Play, the Android app, or Apple App Store. So in Google Play, they have around over 5 million download, and you can do a, and then after you download, there's a redeem code will be available in the wallet. You can redeem it. So let's get back to also another thing, the EOS voting. Currently, we are at 10% right now, so 15% is just 5 more percent to go. So it will take about, just bear in mind, it takes 15% of the votes in order to activate the EOS blockchain. So let's get back to the price of Bitcoin. So there's an article coming out about Bitcoin price was artificially inflated last year from University of Texas. Actually, I forgot to talk about this article yesterday. I meant to talk about it, but I just totally forgot. So anyway, basically this paper is talking about last year, the skyrocketing price of Bitcoin gain last year was caused by the actions of a few big players rather than the real demand from the investor. And also, this is partly because of the activity of Bitfinex. So Bitfinex is one of the largest and least regulated exchange in the industry. The exchange is registered in Caribbean with offices in Asia and was subpoenaed by American regulator after New York Times published the articles that, there's a lot of manipulations of the market and stuff like that. So in order to manipulate the market, the people or the person use a secondary virtual currency known as Tether, which was created and sold by the owners of Bitfinex to buy up those other cryptocurrency. For Tether, personally, they said Tether is backed by US dollars, but I don't believe that. So I don't even touch Tether just to stay safe. I mean, if I need to trade, just change it to fiat currency, forget about Tether. I don't trust Tether at all. And they're talking, Mr. Griffin is the researcher from University of Texas, and there were obviously a tremendous price increase last year, and this paper indicates the manipulation play a large part in those price increases. Of course, Bitfinex executive denied all these allegations, right? Any manipulation and all that. And let's see. Also, the because they look at the flow of Tether, like because this is a public ledger, right? So you can look at the blockchain, you can see the flow of those cryptocurrency from exchange to the blockchain, and then from blockchain to the exchange. So you can see the transaction because it's a public ledger. And Mr. Griffin saying that, okay, the flow of Tether, a token is supposed to be tied to the value of the dollar, is issued exclusively by Bitfinex in large patches. Basically, they issue this Tether out of thin air. Basically, they print whatever they want, just like the US dollar. And they found half of the increase in Bitcoin price in 2017 could be traced to hours immediately after Tether flowed to a handful of other exchanges, generally when the price was declining. So other large virtual cryptocurrency that can be purchased with Tether, such as Ethereum, Zcash, also rose more quickly than Bitcoin in those period as well. The price rose much more quickly on exchanges that accept Tether versus than those exchanges that do not accept Tether. And the pattern stopped when Bitfinex stopped issuing new Tether this year. So actually, Mr. Griffin, beyond working at University of Texas, he also has a consulting firm that works on financial fraud cases, and including some in virtual currency industry. So the relationship between the Tether and the price of Bitcoin has been flat for months within the community and all that. MIT, Christina, a professor at MIT, also specialized in blockchain research. It is great to see academic working trying to casually assess if market manipulation is taking place as well. And in 2013, they also, back in 2013, there's also a research paper that published last year. A team of researchers said much of the the price increase in 2013 was caused by a campaign price manipulation, and at what was then the biggest exchange in Mt. Gox. So just to clarify one thing, Mt. Gox is not hacked by it's not got hacked. Mt. Gox, the collapse of Mt. Gox is because he did fractional trading, just like fractional lending in the bank. For example, in the bank, they so in the bank, for example, a person deposit $100 in the bank, and the bank turn around and loan out this money to, for example, a small business at 10,000. So for the reserve requirement for the bank is only 3%. If all the people go to the bank to get their money out, the bank do not have all this money, because based on the requirement, the reserve requirement is only 3%. Just like in Mt. Gox case, they do not have that many Bitcoin. But when the user in the exchange want to draw their Bitcoin, they are not able to draw their Bitcoin because they did fractional trading. So you said, for example, you buy 1 Bitcoin, but in Mt. Gox, in the exchange, they don't have 1 Bitcoin. Probably maybe they have 0.1 or 0.5 Bitcoin. And then a lot of users keep buying the Bitcoin and all that. And when they try to withdraw from the exchange, they cannot, because Mt. Gox, the exchange do not have that many Bitcoin. So this is like a fractional trading. It's not they got hacked by people. Getting hacked is just a cover up. So let's get back to the crypto collapse. So let's get back to this graph. So we talk about the collapse, the Conrail hack. I mean, to me, this is just an excuse. I mean, I don't think this is a reason for the drop of Bitcoin price. And then they say this is a technical breakdown, and then manipulation fears, and then minor margins. So I will get into the minor margins a little bit later. So actually, in my previous video, we talked about the cost of mining 1 Bitcoin can be cost from 531 in Venezuela. But bear in mind, in Venezuela, everything is highly subsidized by the government. So for Venezuela, they mine Bitcoin is 531 is the cost to mine 1 Bitcoin, up to 26,000 in South Korea to just mine 1 Bitcoin. So in Iceland, where Genesis Mining located, the cost of mining 1 Bitcoin is around about 4,700, so roughly 4,800. In the US, to mine 1 Bitcoin is around 4,750, almost like roughly 4,800. So I think those costs is just based on the very efficient farm. So let's see, the mining farm. So let's get back to this quickly. So crypto collapse accelerate as Bitcoin miners turn cash flow negative. So we talked about this earlier because of the Let's see. Because of this, I think this is just an excuse to me. Maybe I think the whale just want to buy cheap Bitcoin. And so they talk about that after the Conrail hack prompt fear, so South Korea to dump their crypto, Bitcoin and Ethereum broke the critical technical support level 7,000 and Ethereum at 15 MACD and break the 600 the supporting level. So here they talk about, refer to the University of Texas. The professor talk about Tether seems to be used both to stabilize and manipulate Bitcoin price. And also Bloomberg question about Tether and Bitfinex have dodged the cryptocurrency world since last year. And also show a pattern of Bitcoin price. The analysis also show a pattern of Bitcoin price support. Tethers are created by a parent company, Tether Limited, often in large chunks, such as 200 million. Basically, it's created out of thin air. Okay, I mean I don't think they're supported by any US dollar at all. Almost all the new coin then moved to Bitfinex, and then when the Bitcoin price drops soon after the issuance of the Tether at Bitfinex, the other exchange are used to buy Bitcoin in a coordinate way that drive the price. That's what in the paper from the professor that published out. And so let's talk about the mining costs. So the mining cost is roughly between 5,900 to 6,000 because they have to update their equipment. And also they talk about the bit miners fire in the game of the chicken, saying that 70% of the price drop since mid-December, which is almost 20,000, has cut the profitability to the bone with the cryptocurrency nearly 6,000. Only the biggest and most efficient miners can stay above the water, but even they are balancing on a knife edge. So let's take a look at this thing. So this is, they talk about the most advanced Bitcoin rig risk losing money as price slump and miners stay connected. So this is a wholesale price, wholesales for the profit in here. So, and this is the retail. So miners start to lose money at 6,800. So if you're on the retail mining, so if it's for wholesale mining like Genesis mining, they're more efficient, so their cost of mining is cheaper. But for retail miners, probably the cost is around maybe 6,000 or 6,005 or something like that. And so based on this, for example, they did a calculation suggesting that Bitcoin stay at its 50-day moving average. If it's 13,000, then the average miner could expect to print about $80 per week in profit at the current levels of hash rate. And this is based on a very generous assumption that a miner is running a Bitmain machine. The model is S9. And this is one of the most advanced system available. And so this is based on the most optimistic view, right? So if the price doesn't rise, and then the average miner is set to lose $3 per week at current level. So the mining companies such as Npool, which probably buying those mine that has less than the retail price, and the efficient miner may still making more money. But still getting a return 90% less than what they would at 50-day moving average, which is around 13,000 Bitcoin. So right now, the miners' profit is getting squeezed. It's almost near, it's almost near the the cost of producing a Bitcoin, and eventually some miners, especially the retail miners, they will shut off their machine because it's not profitable to mine. And also bear in mind that by 2020, 87.5% of the Bitcoin will be mined, will be finished. And we only have 21 million Bitcoin. And the difficulty of mining is getting more and more difficult in the next, by the end of 2020, or in the next 2 years, it will be getting more difficulty. Currently, the miners can reward with 12.5 Bitcoin. And by 2020, they only get half, which is 6.25 Bitcoin. So it will be more and more difficult to mine Bitcoin. So you can go back to my previous video about the supply and demand curve, and with more difficulty and almost the Bitcoin is mined, then will be no more Bitcoin. And also the 21 million Bitcoin is no provide, and there's no inflation. Unlike some other coin like Ethereum, they have a 6% inflation, and EOS also have a 6% inflation. The inflation rate is determined by the block producer, which is based on the 21 block producer. They have a heavy weight of folding, and also based on the standby producer as well, but their weight of folding is less because they are not a block producer. They are just standby. So EOS has an inflation rate, Ethereum has an inflation rate, so only Bitcoin do not have an inflation rate. So once the 21 million is gone, that's it, there's no more. So just bear in mind. So today, of course, we are on the red again. The market cap is 274 billion. Bitcoin is around 6445. And yesterday, CBOE just, the future contract just expired yesterday. So, and I think Bitcoin from 6,100 and then got boost up to around 6,004 or 6,005. And every time there's a future contract expire, there's some psychological, thing on the trader, and also there's also another future coming up. This is a CME future, June 18. So it'll be Monday. So I will see how it play out. Every time there's a future contract is going to expire, there's some volatility of the Bitcoin price and all that, and we'll see how it goes. It will be interesting to see. So also you can check back my previous video that I did long time ago, how Bitcoin futures can manipulate the price of Bitcoin, and how the future market can manipulate the price of gold, silver, and uranium. And this is the okay. If you find the video helpful, please hit the like button and subscribe to my channel. Also, please share with your friends. Also, you can follow me on Twitter. I follow a lot of projects that I cannot address every single project in my YouTube channel, so you can see what project I'm following right now. And also, make sure you subscribe so you don't miss out the upcoming airdrop, hard fork, and ICO. I'm not a financial advisor. Investing in ICO has inherent risk. Please use the due diligence. Remember, we the people take control of our money. Stay wise, stay safe. Peace.